Hello, everyone, and welcome back to another exclusive Boom Room interview. This is Sasha with Arcanum Ventures. I'm here with my good friend and colleague, Carmelo. And today we are graced with Jack Platts and Mehdi Farooq, partners at Hypersphere Ventures. Welcome, guys. Thanks so much for taking the time to call on. How are you both doing?
Doing well. Thanks for having us.
Awesome. Yeah. Thanks for having us.
Yeah, thanks so much for coming on. It's really exciting to speak with you guys. Funny enough, we don't get the chance to speak with many VCs, investors, or venture capitalists on this podcast. We did have Laura from Gate Ventures come on before, but it's exciting because we get to talk a lot around like narrative, investment thesis, and these things are constantly changing, I think, within the Web3 landscape. And we've seen some pretty significant changes maybe in the past couple months alone. But before we dive into all of that, we're going to start this interview in the same boring way we start every single one of our interviews. So, give us an idea. Who is Jack Platts and Mehdi Farooq? What's your experience within the world of cryptocurrency, and how did you come to be here today in running and operating Hypersphere Ventures? Jack, would you like to start?
Yeah, absolutely. So I co-founded Hypersphere in 2020, so about 5 years ago. And prior to that, I was at Polkadot, which was a layer one blockchain. And I was there for about 3 years leading their BD and marketing. And that was my basically intro into having a career and intro into the crypto industry, the blockchain industry specifically. So we have launched a number of venture funds and hedge funds in the space. Traditionally, we focused mostly on token investing at pre-seed early stage and through liquid token investing on the hedge fund side that are projects that are out there, protocols that are out there. So we've also invested in some equity businesses, but it's been really the minority. And most recently, some treasury equity businesses that are publicly listed that we'll, I'm sure, talk or touch more on today.
Yeah, absolutely. And Mehdi, you come from maybe a similar background, correct?
Yes. So I'll start with the background of how I got into crypto. So I've been deplatformed multiple times by the government as well as the. So I'm from Pakistan, and I was doing my studies in at Cambridge in UK. So there was a currency crisis, got deplatformed. That's how I got into Bitcoin. After that, in 2020, COVID happened, got deplatformed by Interactive Broker because I was from emerging market. So when I saw DeFi summer happen, that was the aha moment for me that this is the rail for permissionless finance and future of finance. So yeah, I got fascinated by crypto, and since then worked at Messari, worked at Animoca on the investment incubation side. Over whilst I was at Animoca, I met Jack. I hosted him for a podcast. Seemed like we shared a lot of similar theses and thought processes when it comes to crypto investing. We hit it off, and yeah, I joined Hypersphere, and since then, yeah, it has been a very exciting journey. We have done venture investments, liquid investments, and currently doing a lot of these treasury accumulation vehicles.
Yeah, fantastic. I mean, it's interesting speaking with people that have this kind of like, I mean, you might consider it to be similar backgrounds because you both work in the world previously of venture investing, maybe acceleration, incubation, advisory, but coming from two very different ecosystems. I know Animoca has been way more on the venture side, whereas Polkadot might have more of like an overarching narrative when it's when you guys are working on the BD front, thinking about how we can potentially bring builders or companies within this ecosystem itself. And so I was wondering how let's start with you, Jack, if you don't mind. What are some really interesting lessons that you bring to starting Hypersphere from your time at Polkadot, working on that BD front and thinking about how we can try and target builders or maybe incubate builders that are good for this ecosystem, whereas now you're focusing more on we're trying to look at capital markets in a different way. We're trying to look at startups in a different way when it comes to viability and potentially success and then investment returns.
Yeah, absolutely. I mean, I learned a lot from my time at Polkadot, and that was because my boss at the time and the founder of Polkadot, it was Gavin Wood, and he was obviously an OG in Ethereum, the original CTO and co-founder there. So was able to learn a lot about the industry, how to build an ecosystem, how to set out a vision that would attract developers, attract investors, capital, and community members. So that was really my education in crypto from a career standpoint. I had been investing in personally through high school and late high school and college in crypto since early 2013. And so the most important thing I think about my time at Polkadot was basically learning how to. We launched the project. It was a top 5 by market cap and number 1 or number 2 in terms of developer community at the time in 2020. And I think that really was a testament to the vision we were able to set out, the story we were able to tell about how everything would be built on. Each application would need its own blockchain. Each industry would need its own distributed ledger technology, and Polkadot, we believed at the time, had the technical chops, the team behind it to be able to really build something that was scalable and could compose this multi-chain vision. And at the time, there was also besides Polkadot, there was also Cosmos and Avalanche with subnets and many of these other attempts at sharding. It turned out that sharding was difficult both on the economic security level as well as the technical level, especially for interoperability and a different vision. In the interim, with Solana and kind of a single chain, a single ledger with composability between all the applications and assets ended up being the right course for the early 2020s. Maybe eventually sharding comes back as a more stable developer platform for this type of these apps all working together. But so there was a lot of challenges, but also a lot of learnings from a time there. And how we've translated that into building a fund is initially we started out being, I think, pretty closely branded with the Polkadot ecosystem. Just given my background, my co-founder was, is the co-founder and continues to be the lead developer on Polkadot. And with the initial fund, we were really focused on that ecosystem. In subsequent funds, we've gone and looked at Solana, looked at Telegram, looked at cross-chain applications and bridges and even now more financial aspects of things, both with DeFi and with these treasury vehicles. That's been new over the past 2 months, but we've been pretty, I'd say, flexible and nimble in terms of our seeing the playing field, seeing what games people are playing in the investing community around crypto, being early there, making a thesis as to the best teams, working with those teams, helping tell the story, and really take pretty concentrated bets.
That's awesome. I actually wanted to ask you too, because Sasha and I both invested quite a bit in Kusama and Polkadot last cycle, and we're big fans still. But I wanted to get your thoughts on the recent pivot to move away from the parachain auctions to the new core time. What do you think about this sort of, not like a rebrand is not the right word, but this new structure that they've introduced?
Yeah, I'm probably not no longer the best. At one time, I was one of the best people to speak to it. I think I no longer am, and but I think those are the right things to focus on for the reasons that maybe stopped additional developers from building on the platform. So what BitTensor's done in terms of with their subnets and the recent DTAO upgrade, I think it was in February, to allow just a cheaper, shared security is the right direction, and more interplay between the subnet tokens and the main relay chain or the mainnet token and Tau or DOT are the right places to focus on. So I'm sure they'll pivot into something that hopefully works.
Yeah, I mean that's a better answer than we don't often get to talk about Polkadot with anybody, so it's nice to hear that. But thank you for sharing that.
Yeah.
Yeah, Mehdi, I wanted to ask you because you come from, like you mentioned before, Messari and Animoca. Messari being, very heavily research focused, Animoca being very heavily venture focused, and you've worked within the areas of not only incubation, business development, but also tokenomics at Animoca. And so, how does that kind of translate over to your role and supporting Hypersphere Ventures now?
Yeah. So experience at Animoca was very interesting. Animoca is very Asia focused, and they have two core pillars. One was investing, the asset management, and the other one was incubation and acceleration. So I worked at Animoca for 3 years, and I was in a privileged situation where I was able to sit on both. So spend first half purely incubating, and the other half kind of doing both, but more focused on investment. And whilst I was there, I saw they had multiple teams. They had a treasury management team, they had market making team, they had a marketing advisory and tokenomics team. And the time I came in at Animoca, they were diversifying the business away from just NFTs and gaming into other sectors, such as deep in infrastructure. So my background at Messari, I was focused, like I was a hub analyst there. Basically, my job there was write these write-ups on infrastructure. So that knowledge helped me kind of help incubate projects, as well as expand Animoca's horizons into these vertical. So over there, helped incubate this interesting protocol called Humanity Protocol. Helped advise Revolving Games, which is one of the leading gaming projects at the moment. And there were many projects like that, like for example, Open Campus, Mockaverse. So you do get a very interesting lay of the land. And one novel aspect I learned was how critical exchanges are in crypto, and most of these exchanges are Asia focused, and how to deal with them and navigate with them, and how to work with market makers around that. So thought was a very interesting perspective. Gives you a perspective about market structure when it comes to venture, gives you a perspective about market structure when it comes to liquid investing. And one of the reasons why we recently started liking these treasury vehicle is one simple reason is right now, because of this exchange and market making dynamic, there's a bit of extraction happening, at least with these treasury vehicles, which are regulated security, that rent seeking doesn't happen. So that experience kind of translated into novel expression of investments. So yeah, pretty grateful for having that experience in Animoca and having a base level research background.
And you're also pretty heavily plugged into token economics as well, because we've spoken with you briefly in the past about that. So it's always nice to speak to fellow token economics builders. Sorry. And yeah, we wanted to ask also, like you guys gave us a little bit of information on Hypersphere, but we admittedly don't know so much about what you guys are working on these days. But could you just quickly dive into like what was the thesis behind starting Hypersphere Ventures? And also on the site, it says that you're an investment platform as well. So we just wanted to touch on that. Like you're not like just a fund. So what is Hypersphere doing right now, and what's your goals for the next year, let's say?
Yeah, absolutely. No, that's a good question. So initially the vision for Hypersphere was building a fund in crypto and Web3, coming from that Polkadot kind of background. And taking it back now that I'm the founder, most focused on this, I've wanted to be an investor since I was pretty young. Maybe I was one of the people leading the stock trading clubs at school and stuff from 12, 13, and tracking my crappy trades at the time. So from that perspective, I was very interested in it, and really crypto came as kind of an intellectual kind of pursuit in some respects. It was obviously new when Bitcoin came out, and I read everything that I could on it at the time in 2013, and it seemed like a great opportunity to be able to make an impact, grow quickly, have responsibility that in a, as a 18, 19-year-old, you kind of have these different paths you can take in life, right? You can kind of go through a well-trodden path, something that has many people who've come before, and thousands every year who kind of go to these career fairs and join IB and all these different things, or you could try something new, or newer, like a new industry, and maybe take more risk. And so I was always a little bit more entrepreneurial, wanted to do something that maybe had a little bit more risk to it, and so was more attracted to this vision of building a new financial system, building a new kind of bearer asset that was outside of the traditional system, and it felt new, it felt very exciting, and I think it's and so I started to read books like The Sovereign Individual, and that came out in the 90s, and these sort of things that are kind of the intellectual backbone for this movement, for this technology, and then basically kind of immersed myself in it when I went and moved to Berlin and Zug, Switzerland, to work on the Polkadot project, and then back to the US with Hypersphere. So I think in terms of the question on the platform side of things, we have launched multiple funds. We've tried multiple things, made some mistakes along the way, having not been trained traditionally in a fund structure. We've had to learn things along the way ourselves, launching venture funds and hedge funds. And really, what's meant by that is, we're a platform for investing in technologies and assets that are new and that are high growth, and we believe that we'll be able to be kind of early movers in whichever new category or new kind of that comes to bear. And I think we've, with Mehdi joining and some other teammates joining, we're starting to build a pretty good team.
Awesome. And in some of these, like, what was the most recent fund you raised, or how many funds have you raised total with Hypersphere so far?
We've raised 4 funds. The most recent one was
Okay,
Hypersphere Atlas. So
nice.
we're big fans of Ayn Rand and Atlas Shrugged. So that's what kind of in part where the name comes from. And we raised that fund, I think it was February last year, about 100 million. Yeah.
Oh wow. Okay, and that plugs in pretty much into the thesis, like the libertarianism and these sort of ideals. Yeah.
Correct. Yeah. Really, kind of believing individualism, believing in the power of the individual to just do things, to take responsibility for themselves, for their community, their family, and hopefully build a better future.
I dig that. Do you have
Yeah.
any? Do you have any like Have you made any investments with this new fund yet, or what's like kind of the prototypical investment that you would make for the Atlas fund?
Yeah, so we like high concentration bets and things that we understand well. So last year, I think our biggest investment at the time was into Solana. We had a liquid position going into the into February, March, whenever there was this FTX estate sale. Famously,
Yeah.
FTX before it went bankrupt had high single digits percentage of the total Solana tokens. And when they went bankrupt, there was an opportunity to purchase some of those. They are vesting, and they were vesting over multiple years. So it's kind of a slightly longer term bet. And I think we were the third person the broker who won the business called. So we committed the next day, and we're excited about that. We did one or two other kind of treasury like investments last year of working with foundations directly to purchase tokens of ecosystems we were really excited about, including Telegram and Ton. And then we did one or two of the kind of liquid opportunities. One was Athena. So these are kind of DeFi opportunities where you lock up a certain amount of stable coins over a certain amount of time, and then you receive either yield or you can receive governance tokens. And we chose governance tokens for Athena. They were really one of the pioneers to these liquidity rounds. So we were also kind of excited to be a part of that theme last year. This year, we've been focused a lot on these treasury deals, these kind of Microstrategy like public equities, and we've invested in about 4 of those, deployed about 70 million so far into that strategy.
Wow. Okay. That's a great answer.
Yeah.
And just real quick, I wanted to ask you too, because this is really interesting, but just on the state of raising for funds in 2025, there might be some people out there watching that are looking to raise funds. And do you have any advice on how to find LPs in this climate right now? Because we do want to touch on later what you said about MicroStrategy and also liquid funds and opportunity funds, and how
Yeah.
we have to pivot in 2025 to create new opportunities, since the old paradigm is kind of dying and shifting. So if you have any advice for people looking for LPs for their fund.
Yeah, I think there's definitely folks who have been successful in raising funds this past 6 months. Really, there's kind of just kind of anecdotally and from what we've been able to tell, there seems to be somewhat of a barbell where if you're raising your first fund and maybe it's 15 to 25 million, there seems to be sufficient number of family offices and fund of funds and seeders that will come on and anchor that, or help and by investing in you. And those are really seed stage types of funds. And then there seems to be kind of these other funds that have reached escape velocity on the much larger side, like Han Ventures or Framework, or and then obviously the name brand ones like A16Z and stuff that are more in the 500 billion range, Dragonfly. And so those seem to be, and those are catering more to institutional investors, endowments, that sort of thing. So that seems to be the types of funds that have successfully fundraised over the past 6 months or so. There haven't been as many, I think, not just
Yeah,
in crypto, but in
in
venture
general.
broadly. There's been a glut of you're even reading about Harvard needing to divest from their illiquid alternative assets. And Goldman announced the biggest fund ever last year simply to help Harvard and some of these huge endowments and institutions get out of some of the illiquid stuff that they may be over allocated to in the 2021 boom. So it's not just crypto that has a lot of family offices that are going, oh, geez, I haven't gotten any DPI from my 2021 vintage. Do I really want to come on to a new 2025 vintage? So I
Yeah.
think the debate hasn't started publicly, at least that I've seen, as far as does that present opportunities for people that are still long-term bullish on venture and crypto venture specifically. Are we still in this digestion period where it will take another year before there's a glut of venture capital dollars chasing too few entrepreneurs and too few deals? It doesn't feel like we're yet through that, but I think at some point over the next year, I'd imagine. I don't think crypto venture is going away, but I think that conversation will hopefully become more optimistic than it is currently.
Well said. I agree with you there.
Yeah, it's really interesting. I mean, it sounds like you guys are incredibly focused on the liquid token side and then the treasury management vehicle side. But your historical portfolio shows some deployments into some really notable startups. And I'm wondering what Hypersphere's venture side kind of looks like. Given what you said, it sounds like it's not so active. And I completely agree. There are a lot of promising projects that have come to market or that are currently coming to market that seem like good investment opportunities from a fundamental perspective. But there are some things that people or investors have simply not considered. And it goes back to what Mehdi had said and how important the market side of this really is. You could be launching a digital asset, but if you don't have all of the pieces lined up in an exchange listing, making sure there's proper liquidity depth, making sure there's access for new investors to come on board, all these different things, then venture still seems slightly broken. And I want to pivot more to that liquid token side, but first and foremost, I want to ask you guys your opinion on that venture side. Are you looking only for token deals? Is it more equity based and good fundamentals, but supplemented by a token warrant or a token reward agreement, or are you guys just kind of taking a pause from that altogether for now to pursue this other strategy?
Yeah, not that taking a pause, but Mehdi, you have a lot of good thoughts on this.
Yeah, I think our fiduciary duty is to make our LPs money and generate the highest ROI. Um, so in terms of that, we are actively investing in venture as well. We have done few investments, but the opportunity set has reduced, and I think there are the multiple reasons for that. There is a macro headwind, but I think mostly it's the structural changes that are happening in the industry. For the last couple of years, the focus has been for founders rather than building amazing products. There have been few, for example, like Pump.Fun, Ethena, all of these amazing products. But most of the founders in crypto, their more focus has been how do I get this token into the best exchanges rather than working on a good product or a vision.
I think that there are aspect of ventures that are broken. Venture investing in altcoins. And I think there's a lot of stakeholders along the, like whenever we were launching Polkadot, right? And I was responsible for making sure we had custodian support, wallet support, exchange support, traders and market makers willing to trade the token. It's kind of like running towards TGEs, like running a gauntlet, where there's all these stakeholders along the way who their whole business model is getting some of your token and selling it. So
Yeah.
they're kind of farming your altcoin. So you have to pay kind of off all these people to even be included in the financial infrastructure of crypto, so people can buy, custody, trade, use your asset. And so I think whenever we see over the past year, the question could be posed as what is a successful crypto launch over the past 12 months x hype, and it's a really hard question to answer. There's not really many of them, and you could probably count them on one hand or not even. So all the different reasons that is, I think would be a whole podcast episode in terms of covering that.
Yeah.
Yeah, so there's some structural issues in crypto, and because of that we see more liquid opportunities, um, and hence our tilt has been towards those opportunity to capitalize on that. I think we're also in a very interesting position. If you look at something like NASDAQ or S&P 500, you have these fangs or magnificent seven type of stocks. I think in even in crypto, I think we are seeing some winners emerge, and so those winners will compound, and the best investment in trade could be to just invest in those compounders, right? So one is Bitcoin, another is Solana, maybe Hype and BitTensor are other compounders in the future. So I think it's mix of those reasons why we have a little bit of tilt towards liquid. Uh, but if there is a great opportunity, which is uh, which is 0 to 1 with a quality founder, we do back them. So one recent one has been Reborn, which has a partnership with Unitree. Somehow they were able to get the best robotics partnerships in China, and seem to be doing a lot of interesting works on the robotics front using crypto incentives.
Yeah, I think it's a really interesting point. I mean, we talk a lot about tokenomics, and it's great having this understanding around how these economic systems might work for a company that's coming to market, that's integrating a digital asset into their business model. But that's just one piece of it. If the economy structure is correct, then hopefully there's some value accrual in the liquid asset that all of these different stakeholders are hoping to get their hands on. But that depends entirely on the underlying business to be successful. And I think a lot of people are ignoring the fact that regardless of whether it's a token or it's equity, these are tech startups, and the horizon to generate healthy revenue and to be profitable and then translate that into shareholder profit is much longer than a lot of these vesting schedules kind of allow, right? And so liquidity that we've seen in many promising startups coming to market is wiped out very, very early on by a lot of these different stakeholders that are getting these assets. And so it's interesting talking about, like, the market cap to liquidity ratio of these assets that are going to market, and liquidity depth is so low where you're looking at anywhere from a 10 to 100 ratio, which is very, very unhealthy. And you made a good point about the fiduciary duty that you have to your different LPs, and you have to pursue alternative strategies that are going to make more sense in the short term financially. You hear a lot of VCs talk about, we don't want to launch another fund because the markets on the venture side are not so great. We haven't been seeing the performance that we're hoping for. At the end of the day, all you really need to do is outperform Bitcoin, which seems to be quite hard nowadays. And then when you bring on leveraged instruments, when you bring on these treasury management strategies, not only do you have to outperform Bitcoin, but with all these different companies coming to market behind these treasury strategies, now you have to outperform leveraged or professionally managed Bitcoin. So it's a completely different game now.
It is. I mean, I think I don't know if anyone's benchmark is going to be beating leveraged Bitcoin per se, but no, the point's well taken, and that the opportunity set is has expanded to include these vehicles. I mean, we started some of our first investments were in pre-launch token projects, and here we are as meaningful contributors to SPACs and to reverse takeovers and to some of these other constructions that are happening. So maybe we spend a second on that. I think the past 2 months, the advent of these MicroStrategy like treasury accumulation vehicles in starting in Bitcoin with 21 Capital trades under CEP, and then moving to Solana as well with Upexi and Soul Strategies and Janover, now DeFi Dev Corp. So really, what's going on here? I think from my perspective, I think the core that MicroStrategy provides to investors, beyond just access to Bitcoin in their Robinhood account or in their institutional private wealth management account where they can't buy or custody crypto. So beyond access, it's really yield on Bitcoin or yield on the assets. And how this exists or why this exists is an interesting discussion. But typically, MicroStrategy over its history is traded at a premium to its net asset value. So if its net asset value, meaning the number of Bitcoins it has, is worth $1 billion, it's traded anywhere from a market cap of 1.5 billion to 2.5 billion. And that allows MicroStrategy to take Bitcoin accretive actions, meaning acquire additional Bitcoin per share that you hold. So if you hold one share of MicroStrategy, the amount of Bitcoin you're entitled to has historically gone up at a rate of 5 to 15% in some cases. So and they do that through issuing additional common stock, preferred shares, or most notably convertible notes. So convertible debt that allows them, the investor. The really interesting thing is what MicroStrategy has done is it brings in non-crypto native investors into this trade. So there's all these arbitrage funds out there that are buying the convertible debt directly from MicroStrategy. MicroStrategy is using that to buy additional Bitcoin, but then the convertible debt funds are either shorting the stock or shorting the underlying, meaning shorting the Bitcoin, and they're just taking a credit spread volatility bet. And they don't want any directional risk on Bitcoin. But here it has allowed MicroStrategy to acquire over 2.5% of the total Bitcoin supply, and all these other players to come online to try to do similar things.
Yeah,
Yeah.
to
Go
my
ahead.
earlier point as well, right? Like there are few tokens out there or protocols out there that we feel will compound over a long period of time. Bitcoin is obviously one, Solana and others might be others. um, so one interesting strategy with these treasury accumulation is what you're doing is um, you're funding the accumulation of these assets at a cheaper cost of capital. So assume if your cost, if your growth of a protocol is at the rate of 20%, 30%, but the cost of capital these capital markets are happy with is 8, 9%, you have this arbitrage between the growth versus the capital markets cost of capital. So I think one of the reasons why this premium exists is markets are discounting that future arbitrage to present value, and because of that reason, we feel maybe not to an extent of 3 4x premium. It will, it's reasonable to say that it will be more than one NAV premium. So this kind of creates a very nice asymmetry in terms of the investment, where if you like the underlying asset, you can basically compound that over a long period of time, and take advantage of the asymmetry this provides.
Yeah, absolutely. I think, well, I guess this is a good time to dive really deep into these TAVs and then try and understand what's happening here. I think that this emerging narrative is really interesting because it highlights the growing interest of traditional financial markets to step into the world of Web3. And I know that regardless of what markets you're looking at, there's always some speculation somewhere. These premiums that these assets are trading at compared to the NAV or the underlying collateral that's backing these assets is, this premium is largely speculation, right? If you talk to anybody, they say like they don't know what the real reason is. There's no fundamental behind it, but the consistency in the premium existing has built some confidence in investors. And when you talk about arbitrage, let's take stable coins for an example. Even like 2% arbitrage when it comes to volume is very good, right? So the fact that they're trading at like a 200 to 250% premium on the NAV is very, very impressive now. But if we're looking at like the number of treasury management vehicles that are coming to market and this exponentially growing interest, then doesn't that mean that's going to accelerate the closing of the arbitrage ultimately?
Yeah, it's a good question. So we've talked to Mehdi, I'd say 25 plus of these treasury acquisition vehicles, as you put it. So the things we're looking for are, firstly, what price to NAV are we and our investors getting in at, and we think pretty close to one is the right number because it protects your potential downside. MicroStrategy traded at worst at I believe a 15% discount to their NAV during the kind of crypto bear market, 0.9, 0.85 kind of thing. But historically, it's been in that 1.5 to 2.5 times range. And the second thing we look at that's really important is the management team and the partners. So we were really excited to make our first investment in this category in 21 Capital because the backers behind it were, we believed are in crypto for the right reasons and in crypto for long term. That's Tether. They put in $2 billion of Bitcoin, and SoftBank, which put in $1 billion of Bitcoin. So that was SoftBank's first time. They're the BlackRock of Japan. They have never touched crypto before, so that was a really big deal. And then Cantor Fitzgerald, which was founded by Howard Lutnick, the current U.S. Commerce Secretary, was the banker on that transaction. And also on another one we just announced yesterday called Strive Asset Management, or ASST is the NASDAQ symbol. And that one was also, we believed, had the right team behind it with Vivek Ramaswamy and the people he brought over from Strive, which manages about $3 billion in ETF assets. And then they had a lot of kind of interesting ways of making Bitcoin accretive cash flows using different strategies. So we really like that. The big question is, okay, it's getting there's more capital available for these types of pivots for these public companies into treasury acquisition vehicles. There's more investors like us who see the opportunity and want to fund that pipe or that convertible note. But who stays on and makes the decisions after? What's the management team like? Another one we invested in called SBET is in part led by Joe Lubin, who we thought from the Ethereum side of things was maybe the best person outside the Ethereum Foundation or Vitalik himself to run this vehicle, and he's the chairman and taking over for that. So the team, the net asset value are two really important aspects of what we look at in backing these. So there's longevity of these vehicles, because I'm sure not all of them, to your point, Sasha, will work, but we want to be in the right ones.
Actually, I'm happy you mentioned that because I wanted to ask you about Joe Lubin's new startup or vehicle, and then also Sharplink Gaming and how they want to do the same strategy basically for Ethereum. So do you think this will work quite the same, or if there's any latent risks for this strategy since it operates differently than Bitcoin, for example?
It's So I think there are two components to it. One is you acquire Ethereum, and the second component is you do Ethereum staking and potentially restaking. So one can argue there is economies of scale underlining the business, and that validator business, the staking business, should have a multiple because you can run that business for 5 years, 10 years, right? So from that perspective, one can argue that the premium should be higher. Also, another argument is if you think Ethereum might grow faster than than Bitcoin, you can then also argue the NAV premium should be higher. But I think it's a different flavor of accumulation vehicle. We have been in the market chatting with other vehicles as well. Some people are even thinking about how to generate yield through NFTs. But this one right now feels the
Wow.
cleanest skill. This like the core business seems to be a bit more solid in terms of staking and restaking and some of the yield opportunity Ethereum provides.
Hmm. I think it's really interesting seeing like the diversity in these vehicles coming and targeting, like, maybe top 4, top 5. We've heard about the XRP one, the Ethereum one, the Solana one, and
XRP one didn't do well,
we
right? Like that's why some of the metrics is important. Like
yeah.
you come close to NAV, and you back the right management team, which we have been lucky enough to do with some of our vehicles. But let's say you look at one of the XRP ones, BBPR, right? After announcement, it's trading below the price.
Yeah.
The Saudi prince came in, right? So I think the like it requires sophistication in terms of even analyzing these vehicles. When we are analyzing these vehicles, we dive deeper into the financials. We look whether the shell vehicle or the vehicle itself is clean, the management is good, the governance is proper, and loads of different metrics that Jack was mentioning, right? Like NAV premium
Mm.
being the most important heuristic. Uh, so yeah, that just gives us a little bit of an edge in terms of evaluating these vehicles.
Yeah, yeah. I mean, if we look at yield and value accumulation and what's sort of like driving that NAV premium, What are these individuals that are investing in these assets expecting to gain? I know that there's merit behind the idea that there are many people that don't have access to, let's say, custodially buying and acquiring some Ethereum or Bitcoin or XRP or Solana. It's a great way, just much like these cryptocurrency ETFs that allow people to gain exposure to these underlying assets. And ultimately, that market is going to be dwindling as decentralized infrastructure continues to improve, as more people are being onboarded in centralized exchanges, et cetera. And so we talk about that kind of target market that's kind of shrinking. But then on the yield generation side, one of the narratives that is driving that premium is that these underlying assets, are being used in various DeFi opportunities, whether it's staking yield, whether it's liquidity provisioning, whether it's lending and borrowing, etc. Are you at all concerned about the sheer volume of institutional capital that may enter into the space and be directed towards these DeFi opportunities? Because I know that there are a lot of DeFi protocols that maybe cannot sustainably handle this massive influx of capital and provide the yield that's expected for these investors. Or do you think that the Web3 and cryptocurrency industry will catch up, where these assets will find a home in new types of financial instruments or new types of financial engineering that's going to provide that expectations for the yield?
I don't, Mehdi, you can jump in here too on your opinion, but I don't think we're there yet in terms of a lot of this capital being diverted to on-chain strategies. Of the ones we invested in, I think SBET or SharpLink Games is the only one that's considering these on-chain activities related to DeFi or restaking. The majority, I think, of the most, let's say, exotic thing a lot of these vehicles are doing in Solana or Ethereum's case, where there is these on-chain opportunities, is related to staking and running validators and having a validator business. We don't see or foresee there being 500 million or $1 billion dedicated to on-chain strategies in the near term.
Jack is correct. And I think there are certain DeFi protocol I feel already. Like if you look at Maple Finance, that has the lending facility for $2 billion worth of Bitcoin with Cantor fits with Cantor, that partnership, and would potentially have a TVL of around 4 billion. So seems like there are few protocols out there like Aave, Maple Finance that might be ready when this type of opportunity comes. But right now, I think the most exotic thing we have seen is staking, maybe restaking, in terms of your assets.
Yeah, fantastic. That was maybe one of the big questions I had, because I'm not sure what that kind of influx, what that impact's going to have. And so it seems like a lot of the short term value that's expected behind these instruments is going to be in terms of what we've seen from strategy, where there's going to be some financial engineering, there's going to be maybe some collateralized instruments and some let's say convertible debt that's offered, because there's the expectation that this asset, Bitcoin, is going to be growing in the future. So this is more of a safe bet when it comes to investors into our equity that's being powered.
Yes.
Oh, Jack, you're on mute.
Thank you. I think the main aspects of this that are enticing is access on both sides. So the crypto economy gets access to traditional capital, some of these non-directional buyers and the ARB funds and potentially retail and other types of investors. And then on their side, they get access to Bitcoin or Ethereum or Solana in an equity wrapper that they're familiar with. I think that's one aspect of this where that gives reason for there be a slight premium or on a lot of these vehicles. And then the yield aspect that I mentioned. So why did Tether put 2 billion into this in Bitcoin? In part because I believe that they wanted yield on their Bitcoin. What's better than having the best performing asset over the past 10 years is having that asset plus yield. And so these types of strategies could, Michael, and this is why Michael Saylor with Strategy constantly refers to his Bitcoin yield. When you go to strategy.com's website and dashboard, they have Bitcoin yield right there, and it's an important metric, for that. And you don't have much liquidation risk, especially over, we can talk about the converts in 2027 and 2028 and this sort of thing. But in the near term, next couple of years, there's very little risk of kind of leverage turning into liquidation risk in the way that you would have for the perp position or borrow to get leverage on your Bitcoin. So the investors get leverage, or yield in the form of Bitcoin. So those are, I think, a couple of the reasons why this premium exists. And then also there's just a ton of capital in traditional markets, NASDAQ, et cetera, that want access to crypto. And we're currently in a positive market environment. I think if Bitcoin goes to 80K or 70K, you'd see these premiums collapse, maybe even turn negative in some cases. But so long as there's more demand than supply, so and we should differentiate between the premiums. I'd say MicroStrategy's premium is much more real than, say, some of the things we've invested in that haven't actually become liquid. They've just had an announcement, and then investors like us in the pipe or the convert are locked up for some amount of time. And so there's a very low float in some of these cases. In SBET, it was, I think, $5 million. And they raised 400 million. That 400 million is locked up for however long. So the premium to NAV is a little bit during that time before investors get liquidity, before it can even out, I guess. I wouldn't pay too much of that. We certainly don't expect to receive a 5x multiple on our investment. We expect it to come down as the supply of the shares come online and investors are unlocked. We still believe that there's an investment opportunity. That's why we're doing it. But I think differentiating between, say, Strategy's premium to NAV and then some of the other ones that haven't just announced that they're doing this is quite different.
Yeah. It's funny because it's this strategy is now turning Bitcoin into a commodity, and what people are actually investing into is the treasury management strategy behind these different companies that are holding this underlying collateral, right? And so you're placing a bet on how good is this company and these people that make up this company in managing these assets. And I wonder, what are your own thoughts around historical volatility around Bitcoin? Because when you think about what's happened in Strategy's case, where they're able to, offer additional shares of their stock or convertible debt or whatever the instrument is, and then acquire more Bitcoin using that premium, it's kind of like a self-fulfilling prophecy where they're predicting that there's going to be some value or price behind these shares, and then they have to acquire the Bitcoin to actually back it up to maintain that same premium. But if there's some volatility in the market, I'm wondering if that kind of affects the strategy a little bit, or it brings some fragility into, what people expect when it comes to that, maintaining that premium.
Yeah, when there's a bear market, or let's say Bitcoin corrects, you do see MicroStrategy stock come down. You see it occasionally trade below book value. Um, but I think the underlining part is, if you believe the compounding of an underlying asset is greater than the cost of capital, you keep on issuing the stock, you keep on issuing the debt, and just keep compiling. Unlike levered per position, you can't get liquidated here. So if your time horizon is 5 years, and I think that's how some of the retail things, let's say if it's trading below one NAV, that's an amazing time to actually come into MicroStrategy, because you're buying Bitcoin at a discount. And they have access to capital markets that they can tap into to buy asset that might compound at a higher rate versus the cost of capital. And again, you get liquidity in perps. You can't get liquidated
Yeah.
when we're talking about convertibles or equity.
Yeah, absolutely.
And
It's
also
an
with these
interesting strategy.
convertibles, the interest rate is bare minimum. Sometimes it's zero. So basically, essentially, what you have is a debt that pays no interest.
Interesting. Yeah, I wanted to ask too. Like, you guys have already voiced some thoughts on this, but what do you think is the gravest risk to this sort of narrative? Like, I've heard some people talk about like a 2008 style collapse. Like, we're one domino away, especially with this restaking. It is very fragile and untested. So, like Sasha said, when you introduce more capital into the mix, or maybe quantum computing comes in and smashes Bitcoin, like some people are worrying about already. So, do you see any like massive risks that you're worrying about or trying to hedge against in the next few years?
I think there's the macro risk that Mehdi spoke about in terms of, look, if Bitcoin is down, it's leverage on the upside and leverage on the downside. So that's a risk. And then to the point for us as kind of pre announcement investors in the pipe or the converts, we need to be sure that the management team can actually pull off the reverse merger, the share registration, the SPAC. They can raise the sufficient amount of money. They can do all the filings correctly. They're paying themselves or paying the bankers or however sufficient amount of money. They're locked up the sufficient amount of time to align incentives. So there's some underwriting risk on the operational execution capabilities of the management team and the bankers associated with the deal. In terms of kind of the treasury kind of trade as a whole, I would expect because there's more capital coming online available for these opportunities. I would expect there to be some fundraises that we learn in 6 months didn't do the operational SEC stuff correctly, or thereafter there wasn't really a true management team online to help continue to grow the vehicle, and they kind of just wither away into irrelevance. And investors are hurt by that because they don't realize that there's been a quiet quitting of the management team or something like this. What other risk would you say, kind of Mehdi, over the longer period?
Not having a good fund pen. So, for example, with some of the vehicles we have invested, we have ensured the founding team has a presence. They can go and negotiate deals with governments, other corporates. So I think that part, like in crypto, we call them KOL. So we need a good KOL for these vehicles because there are a lot of them now coming to the market. And I think a portion of your premium will also lie in the fact that how is that KOL articulating the business and operations and the education of these assets? So I think that's also very very important.
Hmm. Interesting.
Wait,
I want.
I wanted to ask real quick too. You guys said he spoke to and invested in a lot. Like, how many of these have you seen so far? And do you think there's just going to be an absolute inundation or oversaturation of these? And is that a risk in itself?
We do think that there's going to be more. It's the most novel, interesting, and potential high growth thing happening in crypto over the past 2 months. And I think now the secret is out about that. I mean, here we are, kind of able to synthesize our thoughts from talking about 25 different deals with you guys on a podcast. So people are going to listen to this and look more into it. So Vegas happened last week, and with the Bitcoin conference, and I imagine there was a lot of discussion about more of these types of deals.
And
Yeah, I want to take.
same with
Oh,
Solana
go ahead.
Accelerator. By the way, one feedback I got from a friend was there were a lot of suits in Solana Accelerator running around, trying to see if there could be more Solana acquisition vehicles as well.
That's very surprising. It's like the complete opposite of what you expect when you hear Solana. But I want to take an extreme forward look on this, and then when you think about Bitcoin that is serving as the underlying asset for these vehicles, it doesn't really matter what the label is. There's specific criteria that needs to be met in order for these vehicles to come to market, and it comes down to extreme liquidity, market access, but limited market access to specific players. It comes down to, let's say, yield earning opportunity and the overarching optimism that this asset will in the future increase in value. And so if you think about these criteria that's governing, like, what do I want to build my treasury with, then what's your opinion on future vehicles coming to market that are going to use, let's say, RWAs like commercial real estate or other on-chain financial instruments that meet this criteria, but it's not just inherently Bitcoin?
Mehdi, you want to take that?
Yeah.
Or
Yeah, I think the assets that you think in long term can compound, I think those assets become interesting from a treasury accumulation perspective. So Solana, if you think will compound for next 5 years, yes. If you think Hyperliquid will compound for next 5 years and SEC won't come after it, yes. BitTensor, Ton, any asset that you don't think is a shit coin and will compound over the long term, I think there should be an asset accumulation vehicle for that asset, and I think there might be more than one for each of those assets as well. I don't think it's a winner take all. Maybe it's a winner take most market, but definitely not winner take all market for each asset as well.
yeah, I think
And
that's right.
what do you think, like the percentage, or maybe it's like the top 25 tokens are the ones that could qualify as viable assets for this sort of thing? Or do you have any thoughts on that? And, when does it start to become like a massive risk if we're maybe this becomes a new thing where you need these to survive as a token. You need this. If you don't have this sort of strategy behind you, then you're not going to make it into you're not even going to crack the top 200 maybe.
Yeah, I think the higher volume, more known projects definitely will have higher demand for investors like us who are coming in on the pipe or the convert prior to the announcement, and then afterwards, whenever there's needs to be either institution or retail coming in and to buy the stock. So we would expect there to be, as many mentioned, appetite for projects that have that name recognition. They're themselves really great projects, and they're just playing a. They're telling an access story. They're telling a yield strategy for the token.
Absolutely. Yeah, it's an interesting take. And I think we have to wrap up soon, but I wanted to ask one last question, and it's a hard hitter. So uh, you guys mentioned like your ideology and why you got into this space in the beginning, like being deplatformed and everything. And one of the biggest concerns that I've personally been having over the last several months, especially in light of Bitcoin Vegas that you mentioned, Jack, last week, is this co-opting of the narrative of our space by traditional finance, by politicians, by the strategies and these sort of companies that are coming in. And there's a lot of concern about that and what it's doing to the narrative. And I think Mehdi mentioned that we we have that fiduciary responsibility to bring returns to our LPs. So we need to make money. Otherwise, we're not very good at our jobs. But how does that balance out with the ethos and the ideology of decentralization and, kind of defending against that, let's say, in my opinion, sort of a corruption from centralized finance or traditional finance, whatever you want to call it. And how does that align with the original ideals of what Bitcoin was supposed to be?
Yeah, no, it's a good question. I mean, I've struggled with this before this year with with kind of what was going on in 2021, for example,
Yep.
and all the different things happening there. So I think the interesting thing that I didn't necessarily foresee, but makes a lot of sense, is you have these outsider politicians, populist politicians, non-establishment, whatever you want to call the Trump's phenomenon, or in the UK with Nigel Farage and Reform, kind of these folks who don't have the insider access to the lobbying firms in the powers in DC or London or elsewhere. They don't have the wealth that comes from a lot of the government contracts that we've learned through Doge that exist. That's basically kind of corruption, basically, in many respects, or at the very least, waste, fraud, and abuse. And so they don't have access to that as much. The Trump came from real estate. He did his own levels of business deals that weren't up to many people's moral standards there, but it wasn't of the DC nature, the establishment kind of political nature, right? And Farage, was a metals trader, and I mentioned him because he came out with a digital asset proposal that's very similar to Trump's for the UK specifically, right? And so you're seeing these guys who are non-establishment, use crypto as a way to increase the wealth of themselves, their movement, and the followers of the movement. And the crypto industry as a whole kind of as a bandwagon if you voted for someone else or don't align with some of their other political views. So that is really interesting because it's being used basically as a vehicle to amass more power for these outside the establishment figures, and that's not something I necessarily saw coming. Um, but but the politicians who are in power in the U.S. and maybe eventually in the U.K. are telling you what to buy, and it's Bitcoin.
Yeah, I mean, it's more so. I mean, these are the new insiders now, so maybe that was once true, but now they're directly accumulating. They're building treasuries. These JP Morgans and Grayscales, they're. This is also like calling back to the ETFs last year. Like this is also heavy insertion and integration from the traditional finance space. So, a lot of people are openly cheering them on and welcoming them, but a lot of other people are concerned about the impact this might have on, like maybe we need a fork crypto, or the original cypherpunk ideals are not being honored or listened to or cared about anymore.
Spicy.
I think
Well,
there's a
I think
distribution. I think there's a distribution aspect as well, right? Um, my view is this also broadens the distribution. So I'll just give a very crypto native example. So right now in public equity markets, you have access to what Coinbase and Robinhood if you want to take exposure. But assume a world where now you have exposure to Coinbase, Robinhood, but you can also now invest in Hyperliquid and BNB. So if you wanted access to Binance or if you wanted access to on-chain perps, you have the ability to invest. So I think what these asset accumulation vehicle would also end up doing is widen the net, widen the distribution, not just for retail but also for a lot of institutional investors who just never have access to these vehicles because they don't have the mandate to invest on chain or they don't have the mandate to maybe invest in ETF. And if you think one of the ethos of cryptos is like it should be widely distributed and the distribution should be there. I think this is one way to kind of widen the distribution and the wider base. So that's how I'm thinking, and I think there's a utilitarian argument to that the wider the distribution, more utility it brings to everyone who utilizes this.
That's
yeah,
fair.
yeah,
Yeah.
I
I,
suppose.
I wanted to ask one. I think Sash wants to wrap up, but I wanted to ask one other thing. Like, do you think this is investable for regular people? Like, obviously, you can go out and purchase stock if you're able to do so, but how do retail investors get in on this new narrative that you guys are diving into? It's obviously, you know, quite lucrative if you know what you're doing as a fund with a lot of capital backing. But yeah, how does the regular person get in and profit off this narrative in the next 6 to 12 months?
Yeah, I mean, I think the private offerings are not available for someone who just has a Robinhood account, and I
Yep.
think retail should just be aware of the different offerings, and they have to get, I guess, sophisticated on it if they're going to be trading them. Because, for example, SBET, which we've chatted about here, they had a clause in their offering that allowed them to do at the money sales. So the premium existed at 10x or whatever after the announcement.
Yep.
Um, but then they filed for a $1 billion shelf, meaning they can go out and sell $1 billion of stock to acquire more Ethereum, which is their mandate, and they should do that for shareholders. But then the stock went down, right? Obviously, more shares being issued, it's being used to increase the NAV to buy Ethereum. So that didn't exist for Naka, formerly Kindly. So you're still seeing a 2,000% premium from announcement on that stock. So there's a lot of intricacies. I think for someone trading these, they need to be smart about those.
Absolutely.
Yeah, I think
Yeah,
quick
yeah.
heuristic would be remain close to NAV as possible. So if they're doing any sort of trade or investment, just invest closest to NAV. Or if they think they don't have edge, maybe invest in fund like ours where we have the ability to come close to that NAV.
Yeah, yeah, absolutely. That's great accessibility. Well, we've got to wrap it up, gentlemen, and we're going to wrap it up in the same way that we wrap up every interview, just like we start every interview the same way. And so we're going to ask one last question, but before we do, I want to remind all of our viewers, if you're enjoying this very, very fruitful discussion, make sure you tap that like button. Make sure you throw us a follow. Stick around, leave a comment. We're going to drop some links in the show notes where you can learn more about Jack and Mehdi and Hypersphere. And yeah, without any further ado, this last question is called bullish, and we're going to kind of throw a curveball your way, guys. We're going to ask each of you what you are most bullish on in this industry, except for Hypersphere, and let's rule out these TAVs. So, meme coins is a perfectly acceptable answer. So this is a time to shill your Hypersphere meme coin, by the way.
Yeah, it's a great question. I think we continue to be very, very bullish on Bitcoin. And what else would you say, Mehdi?
Bitcoin. All of this vehicles will buy Bitcoin, so obviously Bitcoin. Long term, I also like Solana. Yeah, Bitcoin and Solana.
It seems like
Yeah.
there's a lot of consensus amongst our peers and funds that Hype is one to be a part of as well. We are not huge holders or anything like that, but that seems to have a lot of momentum.
Yeah.
Yeah, doing quite well right now.
Absolutely. Well, guys, it's been an absolute pleasure speaking with both of you. It's been a very insightful discussion. It's been great to learn about this strategy that you're pivoting into, and we wish you all the best of luck. Thank you so much to both of you for coming on and sharing this conversation with us.
Thanks, Sasha. Bye, Carmelo.
Yeah, thank you guys.
Cheers, guys. Thank
Take
you.
care, y'all. Ciao.